Falling energy and commodity prices playing a huge part in that cooler CPI print this morning. And look, the XLE Energy ETF is down nearly 20% from its recent highs. And my next guest called that top back in May, setting up a long S&P 500 short energy pair trade. And it has certainly paid off. So what's his next move? Back for more is Carter Worth. He's the CEO of Worth Charting. Carter, it's good to have you. My observation is I'm nervous that you're not short energy anymore because I wonder if it means gasoline prices are about to go back up. But talk to me a little bit about what you're seeing on the charts here.
Sure. And of course, thanks for remembering the good ones. We all have our duds. I have them in spades. But for so far, so good. The idea was that energy was just so loved, right? The word or phrase overbought could be implied. But when things get sort of so hated or so loved, from time to time, it's right to take the road less traveled. And now we have this big relative underperformance in energy, some 1,400 basis points over basically 2.5 months. And so now I was just thinking, I don't want to be short energy relative to the S&P anymore, meaning that sort of opportunity has come and gone. I do think that there are things in the market that, as was the case with energy versus the S&P, are interesting here in terms of inflection points. And one of those is small caps versus large cap.
I noticed that. That was a day or two ago that jumped out at you. Why?
Right. So now we know that looking at a ratio is, some people say, esoteric and not relevant, but a ratio chart is simply a way of expressing relative strength. And small cap stocks have underperformed for the better part of a year and now are starting to actually outperform the S&P. And so whether it's an overall bullish call on the market, some people think that's what it has to be. I would leave that aside, but I would say that the setup here, that small cap is beta, and small cap is probably the better trade on a week-over-week basis.
What about the broader market?
Right. So what needs to be determined, and we're all trying to figure it out, and there are a lot of people on both sides, is the rally, the 14% move off of the low, just another counter trend because we are in a downtrend since January, or is it somehow the beginning of something more enduring? My thinking is it remains just a counter trend. We've seen several, and this is, well, a little bit longer in terms of magnitude and duration. It's not a whole lot different. But there are many people starting to make the case, and they're entitled to do it, of course, that the lows are in. That's always tempting. I don't think we'll escape that easily.
What about tech, where we've seen kind of a notable resurgence? I don't know if we'd go so far as to call it leadership, maybe, since early July?
Well, that's right. And the rotation has been just the reciprocal of energy, right? You've seen materials and energy and others that were high flyers really come apart. And you've seen a reciprocal move in sort of hated tech. And to some extent, that puts the market overall at a moment of equilibrium, right? Having drawn down some 25% from its peak and now rallied 50% from its low, the market's almost halfway back to the high point from the low. Now, while Fibonacci is not necessarily the answer to all things, a 50% recovery leaves the market at a level where maybe it belongs, and it's kind of a pair of twos.
Last one, a grab bag for you. If I mention financials, healthcare, consumer, either discretionary or staples, which I know you've recently been less bullish on the staples, but do any of those sectors jump out to you as flashing obvious opportunities here?
Well, of those choices, I would go with healthcare. Financials have struggled, as we know, and healthcare has this dynamic where it's both offensive and defensive. It has defensive characteristics because of the large cap pharma and managed care, things like United Health, but it also has beta and cyclicality because of biotech. And so I would say that's pound for pound maybe the best idea of those three.
All right, Carter, it's great to have you on. Really appreciate it today. Yep, absolutely. Closing out one trade, putting on a few others. Carter Worth with Worth Charting.